How will COVID-19 and consumer sentiment impact FMCG stocks in financial year 2022? With the second wave of COVID-19 wreaking havoc, consumer sentiments are bound to undergo a series of changes again. We can again witness some pantry loading by consumers as we had seen during the last lockdown. Focus would be back on ready-to-eat, ready-to-cook and health and hygiene segment. Large unit packs will again be back in focus as consumers would prefer not to step out of the home during the pandemic. Rural markets will again outgrow urban markets on the back of some reverse migration that is happening. Rural markets are likely to outperform urban markets, leading to players with higher rural penetration and distribution outperforming others. In the FMCG segment, Dabur and Britannia are likely to be the biggest beneficiaries of this changing matrix. We analyze financial performance, market presence, and order books to determine the reasons behind. Dabur is the world's largest Ayurvedic and natural healthcare company with a portfolio of over 250 herbal and Ayurvedic products operating in key consumer product categories like hair care, oral care, healthcare, skin care, home care, and foods. Nearly 77% of the revenue comes from India, while 23% of revenues from countries like Middle East, Africa, SAARC countries, US, Europe, and Asia. In terms of consolidated revenues, nearly 60% comes from consumer care business and 10% from food. Within consumer care business, hair care and health supplements have revenue share of 21% and 19% respectively, while oral care has around 17%. In the health supplements business, Dabur grew 50% year-on-year in the last 9 months ending December 2020. In the hair care segment, December quarter revenue grew by 14%, while 9 months witnessed degrowth of 5% due to the lockdown. Oral care grew by 28% in December quarter year-on-year, while for the 9 months ending December 2020, growth was 18%. New product launches by Dabur in the healthcare and personal care segment are likely to gain traction going forward. Market share in the toothpaste segment improved by 120 basis points. In the consumer care segment, EBIT are around 25%, which are higher than the blended margins of 22%. Despite the recent market correction, Dabur has recently made a new 52-week high of Rs 566. Based on financial year earnings, Dabur is currently trading at profit earning multiple of 44 times. Investors with long-term view can accumulate with moderate return expectation. Britannia. The company gets its largest revenue from biscuit segment and is a market leader with a 30% market share, which cements the position of the company given it is India's largest food category, reaching over 90% of the households. In terms of direct distribution reach of about more than 2.3 million outlets, Britannia is now next only to FMCG major Hindustan Unilever. Britannia has consistently gained market share in the last 36 quarters. In some of the Hindi-speaking belt like Rajasthan, Madhya Pradesh, Uttar Pradesh and Gujarat, market share from 2017-18 to 2020-21 has risen by nearly 1.3 times to 1.6 times. The company's revenue and profit growth on a CAGR basis from financial year 2016 to financial year 2020 has been 8% and 18% respectively, while dividend to shareholders has grown by 37%. On a 10-year basis, Britannia outperformed its peer set by growing its sales, EBITDA and PAT by 12%, 27% and 27% respectively, as against 10%, 13% and 12% by others. Britannia is investing Rs 1,000 crore in capacity expansion in Ranjangaon, which will start in phases over a period of 3 to 4 years. Based on financial year 2023 expected earnings, Britannia is trading at profit earning multiple of 42 times at a discount to its 3 and 5 year average of 46 to 48 times. Investors can accumulate Britannia for the long term.